Commerce Department. I welcome you one and all. Today we are going to see Accountancy Unit 1. Unit 1 is Introduction to Accountancy. Introduction to Accountancy. So we are going to see evaluation of accounting and the meaning and definition of accounting and accounting cycle. So this is your first unit. First, introduction of accounting. In earlier stage, we have only the barter system. In the barter system, what we have done, we have exchanged the goods only. So, earlier stage, there is no medium of exchange. That is, we doesn't have money. Money doesn't introduced. We'll give one goods and we'll get another one goods. That is called barter system. If I give fish, I'll get salt. So like this only happen. So this system is called barter system. So in barter system, there is no medium of exchange. So there is no money. They have not fixed any value for the goods. They will give one goods and they will get another one goods. So this is called a barter system. So in introduction of accounting, accounting is a language of business. Accounting is a language of business. In 21st century, there was a boom in industries. So the money played a nominal role, very important role that time. So in that time, everything has to be recorded. If you're going to the shop, you'll get some goods. You'll be paying something and you'll be getting something. So this is called consideration. That is called consideration. So I'll pay some money and I'll get something. I'll pay some 100 rupees and I'll get biscuit. I will pay 100 rupees and I'll get what? Biscuit. So I'll get the value of money. This term is called accounting. So in accounting, everything should be recorded. If I purchased, first I'm going to purchase something and I'm going to sell the biscuit. While purchasing the biscuit, what I did? I gave money. So while selling, I'll get 100 rupees. So this term is called accounting. So this term is called as accounting. So for everything we'll be paying and whatever we are getting back, we'll get some money for that. This term is called as accounting. This is called, we are accounting everything, accounting. So this is called the introduction of accounting. Accounting is a language of business. So how it is called as language of business? Course of accounting is same. If you are going for another country, means everywhere the rules are same. If you are going for France, there the language will be French. If you are going to America, there will be English is the language. So wherever you go, the language will differ, but the financial statement and analysis of accounting will be the same. All the rules and regulations will be same for all over the world. Wherever you go, the rules of accounting will be the same. So accounting, in short, accounting means you should account everything, because money is a medium of exchange. If you are buying or selling, whatever activities happen, it will happen in the way of accounting. And we are going to see the evaluation of accounting. How this accounting is emerging. That is the evaluation of accounting. In 23rd centuries ago, Chandragupta Maurya's minister Kautilya wrote a book named Arthashastra. In the Arthashastra itself, they have given how the accounting should be followed. What are the rules and regulations should be followed. It is very, very old one. It refers, the references can be traced regarding the way of maintaining the accounting records. In that period, they were following the accounting records. All the transactions were recorded. You know Chandragupta Maurya, you know Kautilya. He wrote a book, Arthashastra. So it was very old one. They are telling about the accounting and the process of accounting and the rules of regulations in the accounting. Next, in the evaluation of accounting, nowadays we used to say who is maintaining the accounts are called as accountant or chartered accountant or cashier, like that. In the earlier stage, no, who maintained the accounts, no, that people's name is called as stewardship. That the very important word, stewardship. Stewardship, no, that stewards will maintain the records of very wealthy people. In Tamil, we used to say Kanakapillai. In earlier stage, the stewardship only follow. Stewardship, what they will be doing, no? Whatever the things happen, the buying or selling, whatever happens, they'll be recording it. If they are giving for interest, whatever may be, they will be recording it. That term is called as, that method is called as stewardship accounting. Nowadays, no, who is maintaining the accounts are called as accountant, and professional is called as chartered accountant. After the 18th and 19th centuries, no, large scale operations. In large scale operations, what have done? The industry is getting boom. Then we have LPG policy, no, liberalization, privatization and globalization. After that, in 1991, LPG policy arose. After that, the globalization arose. In globalization, you know what do you mean by globalization? If one person is there in India, he can invest all over the world, in whatever the country, whatever, wherever he may be. So he can invest in all over the world. So that is called LPG. After the LPG, no, industries got boomed. One Indian is there. I am an Indian. I want to invest in US company or UK company. How can I know whether the company is going in a profit or loss manner? So I have to know the details of the company. First of all, I have to know the company's statement, the accounting statement. I have to get some, if I invest something means I have to get some return. So the only term is share market. If I am investing 1 lakh, I'll get, by seeing the books of accounts only, I can know whether the company is earning profit or loss. So why I am going to invest in that company? I have to get some return. Okay. So through share market, I'll invest the amount and I have to earn profit from it. Okay. So what is the return I am getting? That is the profit for me. That is the expected rate of return. So coming to the point, if I am an Indian, I am going to invest in UK company. What I will do? I will analyze the company. In which company I am going to invest first, and which company is earning profit, which company will give profit throughout the year. So I have to see the financial report of the previous year of the company. So last 5 years record I needed. For that I have to collect the 5 years record of the company. If it is growing in a profit manner, definitely I will invest in that company. If it is going in loss, I will not invest in it. So how I will know it? How I will know it? So I need the financial report of the company. Financial reports mean everything will be there. What all the happenings in the company, what are they buying, they are selling, what are the activities, who are the shareholders of the company, how many shares are there, what is the price of a shares, what is the share per unit, what is the return per unit, everything will be recorded in the books of accounts. In simple way, what are the things they are doing in that company? Everything should be recorded in the financial position of a company or financial report of the company that will be given by the CA, chartered accountant of that company. So by that, UK company or US company, whatever may be, they also will do the same. Like that, they'll get the information from Indian companies to invest in the Indian companies. So all the things should be recorded in the what? What they will record? Financial statement. That's all. Only they are giving, if they are giving in the words means it is not what considered. They have to write it in the numbers. Okay. So what are the operating expenses, what they got back, everything should be analyzed. After that only we should invest in the company. After the LPG policy, before the 18th century, 19th century, after the 21st century, the evolution of accounting has discussed. Nowadays, they are telling about the social responsibilities of the accounting. We are going to discuss the responsibility of accounting also. Social responsibility of accounting. What do you mean by social responsibility accounting? In India, for example, first I'll tell you what is social responsibility. Some companies are producing some goods. Some companies producing some goods, it is very useful to the people. Some companies' goods are very harmful for the people. For example, tobacco product. Okay, so ITC is producing tobacco products, means it related products. They are producing cigarettes and they are selling to Indian people. So they will be getting more and more profits. Here the social responsibility accounting, they can produce, yes, but if I am getting profit of 1 lakh, what I will do? Yes, for profit, in my profit, I am getting profit 1 lakh means I cannot put that 1 lakh into the what? As my profit. I have to give 30,000 to the any other hospitals, cancer hospitals like that I have to give. So 1 lakh profit எனக்கு வருது அப்படின்னு சொன்னா அதுல 1 lakh rupees I cannot take it. I have to give that 30,000 to the some cancer hospital like that. So that 30,000 is the social responsibility, and this plays a nominal role in social responsibility. So we have already discussed about the introduction of accounting. It will be the same. The meaning of accounting and the definition of accounting will be the same. So books of accounts means it will be recorded in a note. So books of accounting. So here they are telling it is a systematic process of recording. So we have some rules and regulations. You should not violate the rules and regulations. They are giving some rules and regulations. They have already given the rules. The accounting standards have given some rules. So we need to follow the same. Standards, IFRS have given some standards. So it is an identifying, measuring, recording, classifying, summarizing, interpreting and communicating financial information. Here they are telling about the financial information only. So what will happen in the business? We are recording the money. We are paying the money. We are investing the money and getting the return. So everything should be recorded. So first we should record what we have done. We have sold or we have purchased. So if I purchase anything, 50 rupees or 20 rupees or 10 rupees, I will be recording it. So first I have to identify it. What I have bought, what I have purchased, like that. So next one is measuring. Measuring means how much I have sold, how much I bought. So that is the measuring. So recording means what I have spent, and recording means I have purchased something now. So I have to record it, and what I have sold, how many times I have sold, to whom I have sold, those things to be recorded. And summarizing, to which company we have sold, how many unit I have purchased, from whom I have purchased. So these things will be recorded in the summarizing. Next is interpreting. If I am purchasing for 20 rupees and I am selling for 30 rupees. So what is the profit in it? 10 rupees. So that is the interpretation. So communicating financial information. So the communicating purpose, the books of records should be clear. I cannot able to explain it for all the shareholders, no. So this is the way of communicating. These records should be in a good manner. So now we are going to see the what American Institute of Certified Public Accountant says. So accounting is the art of recording, classifying and summarizing in a significant manner and in terms of money transactions and events which are in part at least financial character in interpreting the results therefore. So in America they'll use certified public accountants, but in India we use chartered accountant. So in meaning you can write anything, but in definition what they have given you have to write the same as given in the book. So this is the definition for American Accounting Association has defined accounting as the process of identifying, measuring, communicating economic information to permit informed judgments and decisions by users of information. So this is the definition. You have to write it as the same given in the book. The comma, the semicolon, the full stop, whatever they have given in the book, you have to write it as same. Okay. So here some definition attributes they have given. So let us see what is that. It requires the expertise and skill of accountant to design the accounting system and policies to design the accounting process oversee the requirements of an organization. So I need to do everything as a work. A lot of definitions are given. So the American definitions only we have taken. So it is given as recording, classifying, summarizing and decisions by the users of the information. Okay, so next one is the transactions and the events of the business must be recorded in monetary terms. So monetary terms refers to the money, the how much we have given and how much we have buying something for money. So money, in terms of money, what we are doing, that is called as monetary terms. Okay, so the results of analysis. So these persons know, those who are interested to get such informations will be analyzing it. Okay, next we'll move on to the accounting cycle. So moving on to accounting cycle, we see preparing of first is transaction. First is opening entry. Next is transaction, journalizing, posting and balancing, preparing trial balance. So after that we'll prepare trading account. After that we'll prepare profit and loss account. And last one is the preparing of balance sheet. So it is the steps involved in the accounting process. Okay. So step by step only we'll do that. So it starts with the first one is if I am the purchasing and selling something means, so that activities is happening, no. So what I will do is, what is my motive of doing the business? Why I am doing that? To earn profit. Okay. So I'll earn profit. So that is my expectation in the business. So first thing what I'll do is, I'll purchase something. So I'll sell something. So that is the opening entry. Opening entry means I'll purchase something, I'll sell something. So that record we are noting down now. So that is called open entry. Transaction. Next one is transaction. Transaction means for purchased goods for rupees 1000. What does it mean? I purchased goods. Some goods I purchased. So purchased, for example, I purchased pencil for rupees 100. So I purchased pencil for rupees 100. What I have done here? I purchased pencil for rupees 100. நான் என்ன பண்ணிருக்கேன்னா pencil 100 rupees க்கு வாங்கியிருக்கேன். So the cost of it is 100. So the purchased pencil for rupees 100. So the worth of the pencil is 100. What here I am doing? I am paying 100 rupees and I am getting the pencil. So I am getting the pencil and I am paying it for 100 rupees. So this is called what? Transaction. Consideration. What is coming inside? Pencil is coming inside. What is going outside? Cash is going outside. How much we are paying for it? 100 rupees. So transaction means purchase pencil for rupees 100. So that is the transaction. What I have done, what I am doing, that is the transaction. What action is happening there, that is called transaction. Transaction. Okay. So what is transferred? So that is called transaction. Keep it in mind. Okay. We are paying and we are getting back the goods. In the transaction, what I am doing? It is a event. I am paying 100 rupees. I am getting the pencil back. So this is called transaction. This is called as event. Next one is journalizing. So journalizing means I purchased pencil for rupees 100. This is an event happened. So this is called as transaction. After the transaction, we have to journalize it. What is coming inside and what is going outside. Okay. I am a businessman. So I will do the business in point of myself. So what I am paying and what I am getting. I will pay 100 rupees and I will get pencil for it. Okay. What is going out? Money is going. The cash is going out. So 100 rupees cash is going out. The worth of the pencil is coming inside. I am segregating it. I am journalizing it. I am journalizing it. So that is called journalizing. Okay. Transaction means what happening in the business after journalizing. Journalizing means what is coming inside and what is going outside. So that is journalizing. Next, posting and balancing. So posting means what is coming inside, the pencil is coming inside. What is going outside, the cash is going outside. Okay. So here I am posting. Pencil comes in and the cash going outside. So here I am balancing the 100 rupees worth of the pencil worth. The cash, value of the cash is 100 rupees. So I am balancing, I am equalizing whether it is equalizing or not. So that is posting and balancing. So first we see the transaction. What we have done, that comes under transaction. Journalizing means we are classifying what comes in and what goes out. That one. And we are posting and balancing whether we are getting the value of goods or the value of the goods are equal to the cash we paid. So that is called posting and balancing. So next we will move on to the preparation of trial balance. So in this now we'll see what are the expenses we are making and what are the incomes we have got. So that both have to be same. Whatever we have purchased and whatever we have sold, without getting loss, we need to earn profit. So for that term, we are preparing the trial balance. So next we are move on to trading account. So trading account means this trading account, after preparing the trading account, we'll prepare profit and loss, and after preparing the profit and loss, we'll prepare the balance sheet. So first term is trading account. So trading account it will happen in the business concern, the place of a business where the business have been making that place. What will happen? The direct expenses. Direct expenses means all the direct related. What are the expenses related to the business which are related directly. So those things are called the direct expenses and direct revenues, direct incomes. You just get an overview of this. Okay. So after preparing the trading account, we'll prepare profit and loss account. Okay. In profit and loss account, we see whether the company got profit or loss. So it should be shown in the profit and loss account. In profit and loss account, we have two account. In final account, we have two account, that is trading and profit and loss account, trading account and profit and loss account. Trading account and profit and loss account are account, and balance sheet is another statement. Balance sheet is a statement. In final account, we have three stages. One is trading account, profit and loss account, and another one is balance sheet. So these two this trading and profit and loss are what? Account, but the balance sheet is a statement. Are you clear? Yes. So balance sheet will help us to know whether we have got profit or loss. So what are the liabilities over there and what liabilities? The liabilities means in balance sheet we used liabilities and assets. So liabilities means it will give the financial position of the business. Like we have borrowed something, some financial help from some other financial institution, or we might have got loan from the banks. So we need to repay it back, no? So those things comes under the liabilities. And assets means it will be everlasting. It will have the value for reselling it. So those things are called as assets. So I hope you all understood this, and we have seen at last. Let me tell you once again. Accounting cycle. So first one is we need to open the entry, and next one we need to go for the transaction and then journalize it, and we have to post it and balance it, and then we have to trial balance, and next we have to prepare for a trading account. Then after that we need to go to profit and loss account, and last one is the balance sheet. So in the next class we'll see the functions of accounting and the importance of accounting. Thank you.